In this part of the session, we would be learning how to go about with the preparation of books of accounts, and then we would be learning how to go about preparation of books of accounts according to the traditional approach. For us to learn preparation of books of accounts according to traditional approach, we have to discuss some other fundamental concepts. There are some other fundamental concepts that we will be covering for us to go about understanding how to prepare books of accounts. Now, for that, we have to understand there are three types of accounts in the subject accounts. Okay? Now, an account is referred to as a functional unit. Whenever we talk about recording transactions, whenever we talk about preparation of journals, whenever we talk about preparation of ledgers, we always carry that against what is called as an account. So an account is a functional unit. It is the fundamental, or it is the grassroots unit in the subject of account. All the transactions that you carry out in the books of accounts, you would carry that against the account against the accounts. So in a nutshell, account is a element. It is the fundamental element in the accounting system. So like now, when you studied chemistry, you must have seen there are certain elements. So hydrogen is an element, nitrogen is an element. So all matter is made out of element. Okay, all matter is made out of element. So likewise, in accounts, if you have to prepare your books of accounts, we depend on a fundamental element which is called as account, okay? which is called as account. Now, the reason why we would use account is because it helps us to classify and summarize transactions. By using or by incorporating the concept of account, we will be able to go about classifying, we will be able to go about summarizing transactions easily. When we learned accounting process, we saw that classification means grouping your transactions depending on its nature and type. Summarizing means you're trying to consolidate your transactions based on its nature and type. So if you have to classify and summarize your transactions, then you would need the help of this fundamental element which is called as account. Now, there are three types of accounts: personal, real, nominal. Okay, there are three types of accounts in accounts: personal, real, nominal. Now, personal account, real account, nominal account, all these are fundamental elements that we incorporate or we have in the accounting system. Now, let's look at these one by one. First is the personal account. Personal account are accounts which represents an individual or it represents an organization. If it represents an individual or if it represents an organization, it is called as personal account. So some examples are, Amazon account, Thomas account. Okay, Amazon, it is a company. So Amazon account means it is representing the account of Amazon. Thomas account, so it is representing now the account of the person called as Thomas. So that is a personal account. Another example, Kristu Jayanti account. Since it's representing Kristu Jayanti, it is a personal account. Okay? So whenever the account represents a person or an organization or a company, it is said to be personal in nature. Whenever the account represents an individual or an organization, it is referred to be personal in nature. The next is real account. Okay, the next is real account. When the account represents the assets of a firm, it is referred to as real account. Okay? Whenever the account represents an asset, it is said to be real in nature. Now, assets, you can have two types. You have tangible assets and then you have intangible assets. What are tangible assets? Tangible assets are those assets that you can touch, feel, see. Okay? So they have certain physical attributes. Those assets which have physical attributes, they are referred to as tangible assets. Then you have intangible assets. So intangible assets are those assets that you cannot see, you cannot touch, you cannot feel. Okay. So for example, goodwill, the reputation of a company. Okay. So for example, Sony has got a reputation, or Apple. I've seen a lot of people going crazy for Apple products. Why? Because they believe in that company. So there's some amount of goodwill. There's some amount of reputation that the company holds. So in the meanwhile, there were some other responses that I got in the chat. Patents, copyrights. Yes, all these are examples of intangible assets. Okay, all these are examples of intangible assets. So tangible assets are those you can touch and feel. Intangible assets are those you can't touch and feel, but they're still essential for a company. Okay, so your real account includes both tangible as well as intangible assets. So some examples of tangible assets are land, machinery. Okay, some examples of intangible assets, goodwill, patents, copyrights. Okay, these are examples of intangible assets. So whenever the account represents a tangible or an intangible asset, it is referred to as real in nature. The next type of account that we have is the nominal account. Okay, the next type of account that we have is the nominal account. Whenever the account represents an income, gain, expense, or loss. Okay, I'll repeat that. Whenever the account represents an income, gain, expense, or loss, it is said to be nominal account. Okay? Whenever the account represents an income, a gain, an expense, or a loss, it is referred to as a nominal account. So some examples: commission, interest, salary, wages. All these are examples of nominal accounts. Okay, all these are examples of nominal accounts. So in a nutshell, you have to remember there are three types of accounts the firm can have. You have personal, you have real, you have nominal. Personal accounts are those accounts when it represents an organization or a company, it is said to be personal in nature. When it represents an asset, it is said to be real in nature. When it represents an expense, income, gain, or loss, it is said to be nominal in